RBC Stock Review. Fully updated 2022. A thorough review of the RBC stock platform from the standpoint of an experienced stock investor. I'll go over its features, strengths, flaws, and my personal experience using it. By the end of this review, you'll know whether or not it's the right stock for you. You've come to the right place if you're wondering if RBC Stock Platform is the right stock platform for you. Because this is the most detailed review of the RBC Stock Platform available on the internet. As an investor myself, I understand how difficult it can be to select the best stockbroker platform, since there are numerous options available on the web, in various price ranges, and with different features. To help you decide if RBC is perfect for you, I'll take you through the platform's features, giving you a verdict at the end. This is to enable you to understand how the platform works even if you are yet to use it. In this review, I'll go through the advantages and disadvantages of each RBC stock feature, as well as how this performs compared to others. So, without delay, let's begin our feature-by-feature exploration of the RBC stock platform. A quick review of RBC stock. Why is RBC a good investment? RBC is a good investment because Royal Bank of Canada's earnings distribution strategy has remained pretty consistent over time, with an average but consistent dividend yield for many years. Based on its prior performance, this company can also be used as a growth stock. In fact, the stock has increased by more than 160% in the last 10 years. With buy recommendations, the analyst consensus remained positive. For investors seeking a solid Canadian investment, RBC shares may be a good pick. Now the cons. Short-term growth is not optimal. Periods of correction stagnation might last for a long time. There is far too much reliance on the housing market. Only U.S. and Canadian markets covered. Now the pros. Exposure to one of the safest banking industries around. High-quality educational tools. Dividend stock that is both stable and slightly generous. The majority of the time, they are extremely reasonably priced. Potential for long-term capital growth. There is very little danger. Quick, useful customer service. Note: this post is for information purposes only and does not constitute investment advice. Remember that investing can be risky. A look at RBC Canada History. After J.P. Morgan Chase, Royal Bank of Canada is the second largest bank in the United States by market capitalization, as well as the second largest in Canada. The Royal Bank of Canada was founded in 1864 as the Merchants' Bank on the Halifax waterfront, long before the country of Canada existed. It was granted a federal charter in 1869 and began to establish a worldwide presence in 1882, when it arrived in Bermuda. In 1899, the company established a presence in the United States, New York. In 1901, as part of the country's expansion, the financial institution was given its current name, the Royal Bank of Canada. The first branch in Toronto opened in 1903. With branches in 801 communities and 18.7% of the total banking market share, it grew to be the largest bank in the country by 1925, after absorbing Union Bank and Northern Crown. It earned multiple titles over the decades and has established itself as the most powerful Canadian bank. The company has a long history in both countries and has multiple subsidiaries including Citizens Bank and PNC Financial Services that operate as part of its franchise network. If you're looking to trade the shares of Royal Bank of Canada, which is listed on both the Toronto Stock Exchange and New York Stock Exchange, you'll need to know that it trades under 3 different symbols. When it comes to investing in Canadian banks, there's no shortage of options. But the Royal Bank of Canada, RBC, stands out as the best option for investors looking to diversify their portfolio. RBS Stocks Trading. RBC trades on the Toronto Stock Exchange under the symbol RY. It also trades on the New York Stock Exchange under the symbol RY. If you wish to buy American depository receipts in Royal Bank of Canada, you may find these available as well on most major exchanges with a ticker code of RY. The bank reported earnings per share of 17 cents for its third quarter, which was 3 cents higher than analysts' estimates. Now, how to buy stock on RBC. To purchase RBC on the stock market, follow these steps. Look for an internet broker who specializes in stock investments. Fill out a quick form to open a trading account. Make a deposit into your account. Look for the stock. To add RBC to your stock portfolio, place a buy order. A typical investment firm, an internet brokerage, or a financial advisor are all options for investing in RBC. Now, highlights and features of RBC Direct Investing. What is the best way for me to sell my RBC stock? If you wish to sell RBC stock, you have a few options. If you currently possess shares in RBC, you can sell them for cash by using your broker's platform to place a sell order. You can also sell a stock short if you don't own it but have a margin account. Finally, if you just want to wager on a stock's price declining, you can utilize derivative products like options or CFDs, which don't require you to own the stock being traded. Now, a look at RBC market capitalization and net income. RBC is a conservative bank with strong fundamentals and a good price-to-earnings ratio. The company is now trading at a discount to its historical average price-to-earnings ratio, making it a good long-term investment for long-term investors interested in Canadian banks. With a 52-week range of $77.70 to $108.75 and a minus 11.3% swing, it has a market capitalization of around $100 billion. It announced third-quarter earnings per share of 17 cents, which was 3 cents more than analysts' expectations. The bank's net income climbed 9% year-over-year to $1.4 billion, or $4.36 billion on an adjusted basis, with a 10% return on equity. Growth in trading and wealth management, as well as fewer operational expenditures, aided RBC's results. Now, common stock buybacks. RBC increased its quarterly dividend by 5%, or 15 cents annualized, to 80 cents per share, in addition to meeting analyst estimates. It also announced a 12% increase in common stock buybacks over the following 3 years, from $1 billion to $1.2 billion, beginning in 2018 and ending in 2020. Now, RBC Stock's metrics to consider. The following are metrics to consider before buying stocks on RBC. Total revenue is the sum of a company's goods and services sold. Capital expenditure. A company's or organization's capital expenditure is the amount of money spent on purchasing or maintaining assets such as land, buildings, and equipment. Assets total. Ownership of capital items, paid for, liabilities total. The sum of all debts and financial obligations, cash and cash equivalents. The worth of a company's cash or cash equivalent assets. Price-to-earnings ratio is a measure of the market value of a stock compared to the company's earnings. It tells you what other investors, the market, are willing to purchase a stock for right now. Price-to-book ratio. Another technique to determine if a stock is overvalued or undervalued is to use the P/B ratio. It's calculated by dividing a company's net assets by the total number of outstanding shares. Debt-to-equity ratio, DE ratio. The DE ratio informs investors about the amount of money a company has borrowed to fund its operations. Too much debt is obviously dangerous, but the DE ratio varies by industry. A high DE ratio does not always reflect whether or not a company is well run. Expense-free cash flow is a metric that measures how much money a firm makes from its operations. It shows us whether a corporation has enough cash to pay its shareholders after paying operational and capital expenses. A look at RBC Dividends. The bank has had a continuous track record of profit growth in recent years. It has a long history of paying out dividends to stockholders. RBC has paid cash dividends to shareholders every year since 1980, has grown its dividend payments every year since then, and will continue to do so in the future, as it has in the past. In 2021, the bank paid out around 40% of its profits in dividends to stockholders. So, why is RBC a good investment? Because it has a long track record, is publicly traded, has a banking background, discloses its financials, and is regulated by a top-tier financial authority, RBC Direct Investing is deemed extremely safe. Based on strong fundamentals and a favorable price, RBC stock is a good buy. The bank is one of Canada's largest, and it trades under the name RY on the New York Stock Exchange. Because the bank has been established for almost 200 years, it has a large list of loyal customers who have used its services for many years. There are no large competitors in any country, which distinguishes the organization from other financial institutions. They also benefit from being able to provide both national and international products to their customers because they operate in both countries. This provides them an advantage over enterprises that only operate inside a single country or region, since they may attract more clients by offering a larger choice of services than their competitors. A look at RBC Stock Performance. While the dividend-based return is sufficient to recommend this well-known bank stock, the possibility of capital appreciation should also be considered. The bank has risen by more than 680% in the last 2 decades. If you had put $1,000 in the bank when year 2021 began, grown to over $7,850 by the first week of 2022, or a staggering $12,400 if dividends were reinvested, what Canadian investment instruments can hold RBC stock? RBC shares can be placed in several different savings vehicles, including RRSPs. These registered retirement savings plans offer funds that are accessible at the time of retirement and offer an income tax deferral. TFSAs. Tax-free savings accounts is an incredibly popular short and long-term tax-free investment vehicle. Margin accounts. This account offers leverage and allows you to borrow against the value of the securities you hold to make other investments. It allows you to sell short. Cash accounts. This account allows you to trade stocks on North American markets only. Now the conclusion. My final verdict: RBC has exposure to other markets, including the United States, where long-term growth prospects are promising. I believe the stock of Royal Bank of Canada is attractive because of its good fundamentals and low valuation. RBC is in a strong position, with an investment-grade credit rating, strong capital ratios, and a substantial amount of liquidity, which I appreciate. While the recent drop in Canadian house prices has caused some alarm, I believe these issues will be temporary because they are mostly the result of government regulations rather than deeper economic difficulties. Because it has a long track record, is publicly traded, has a banking background, discloses its financials, and is regulated by a top-tier financial authority, RBC